What's up, everybody? And in this one, we're going to be talking about whether you should be buying the dip and kind of the way that I'm playing it, the way that I look at everything. So, before I go any further, I ask if you do enjoy this type of content, you subscribe to the channel, you turn on post notifications. It's 100% free, and liking the video, all that good stuff really helps me get this video out to as many people and just build a good community. So, let's go ahead and get straight into it. So as you can tell, you're looking at my portfolio right now. Over the past day, I'm down $207, which is about 1.84%. The past week, I'm down $484, which is about 4.17%. And markets, they're not looking too hot right now, as you probably already can tell. I mean, this video is titled, Should You Buy the Dip? Because over the past month, this stock, the S&P 500, is down 13.62%. This ETF, not necessarily a stock. But over the past week, it's down 4%. In the past 6 months, down 17.86%, which is insane when you really think about it. Even the past year to date, it's down 19.6%. So there's a lot of stuff going on. And one thing that really kind of stood out to me to look at is if we go ahead and just look at the past 5 years on the SPY, the volume right now is very red. This is more consistently red since April 4th until now than the COVID fall down was. If we go 1, 2, 3, 4, 5 reds compared to right here, 1, 2, 3, 4, 5, we just hit that sixth number. And we still have more time to go. A lot of people don't see this ending very soon, but kind of to sum this up, I'll give you a little spoiler. I do think it's worth it to buy the dip. I'm consistently buying the dip. I think the cheaper you can buy, I'd rather buy here and here and here and here and here and here rather than holding it off and hoping I can time the bottom so that I could potentially buy all the way over here. Because if I wait for that, what if it never goes here and it just continues to go up and you miss out on what you thought was going to be a great opportunity? But let's go ahead and talk about some really important things. Here's kind of a little article. S&P drops into bear market territory and market sell-off continues. I mean, we can see everything is down, the Dow, the S&P, the NASDAQ. But here's some really important things. S&P weekly performance is the longest losing streak since March 2001. For the Dow Jones, it's longest losing streak since April of 1932, which is literally before World War II, which is insane, that we're having the longest losing streak since then, which is massive, and the NASDAQ longest losing streak since March 2001. So this is really big, at least in my personal opinion. Seeing these numbers and seeing how long it's been since we've had losing streaks like this, it really kind of shows you that this is kind of bigger than a lot of people are thinking right now. So I'm not saying go and sell all your stocks, go and sell your ETFs. I haven't sold anything. I don't think it's worth it to sell in a bear market. It's kind of like reverse logic. Why would you sell when things are down instead of buy when things are down and sell when things are high? It's all about being able to combat the psychological effects of seeing you lose money and being able to believe in and trust in the process. And that's kind of what it comes down to, at least in my personal opinion. You've got to really be able to have that mental toughness. I like to say MT in the market really is important. And if you don't have that, your chances of being a successful investor strongly decrease. So it's all about that mental toughness and being able to take the mental aspect of it. But let's go ahead and talk about what's going on and how long should this bear market really last. And to be completely honest, you can't really tell how long a bear market is going to last. I can't tell you that this falling market is going to end on June 12th. I can't tell you when it's going to end, how long it'll be. But on average, they take about 13 minutes to go from peak to the bottom. So for example, if we just look at this chart, that would mean like they take 13 months to go from the top to its bottom of a bear market, okay? And continuing to look at that, it takes about 27 total months to get back to break even since World War II. So since World War II, bear markets have taken about 13 months to go from the top to the bottom, and then about 27 total months, about 14 more to get back. So that's pretty important, looking at that kind of gives you a little bit of a broad aspect, but bear versus bullish markets. So as we saw, that said about 13 months is about the average, and then 27 months to recover. But usually the average length of a bear market is about 10 months, according to Forbes. So just looking at different sources to kind of get all that information, the longest bear market occurred from 1937 till 1942. So over 5 years. So that's pretty important, It lasted for 61 months. Do I see that happening right now? Personally, I don't think it'll last that long. I think it could last. I don't want to sound like depressing when I say this, but I do think it could last upwards of 2 years just because of the effects of inflation and affects different things. And just because I see that doesn't mean you should believe the same thing. Everybody has their different opinions. I'm saying it could last up to that. It could last shorter, which I hope it does. And it could last longer. I really don't know. I don't have a crystal ball. But how long do bull markets last? And this is kind of where you get that whole overall picture of upward markets is where you make your money. So how long does a bull market last? They tend to be more frequent. Bull markets have occurred for 70% of the past 91 years because usually, long-term, historically speaking, economies are doing well and companies get better earnings, people get more money, and things like that. So the average bull market lasts about 973 days, which is about 2.7 years. So keep that in mind. Bull markets on the seesaw tend to outweigh bear markets, and that's what people stay invested for. The longest bull market lasted for 11 years and resulted in stock growth of more than 400%, which is incredible. I still do see long-term success in the market. I don't have any doubt in that. Who knows, I could be wrong, but I would be very surprised if the entire world economy collapsed and the market continued to fall for the rest of time. But let's see how institutions are playing this. Looking at institutional inflow and outflow. If we go ahead and just see, usually, so Q3, we'll go to Q3 2021. Let's go ahead and just go back here. I kind of think Robinhood's a little bit easier to look at these charts. If we go to the past year, about December, November time, the market was still performing pretty good. It was increasing, maybe a little flat. But the institutional activity right then, that Q3 of 2021, which is around then, and even Q4, Q3, there was a ton of buying pressure, 341 billion in SPY to 14 billion sold, and then 13 billion bought to 5.76 billion sold. But now we're in Q1 of 2022, and that's when this whole kind of downward pressure has started, ever since about here, and it's continuing. The dollars is about 11 billion bought to 11 billion sold. But if I kind of zoom in, if you go ahead and look, it almost looks like the red is a little bit higher than the green. So I'm not saying that the selling pressure is terrible, that you should sell all your stocks. You play the game how you want to play. I personally am not selling anything. I don't see the point right now. And I mean, if we just go ahead and look at kind of some new filings, this is from all Q1 of 2022 because it takes a whole quarter to delay. But we're seeing some inward pressure, and some outward pressure. So it's kind of a mixed sentiment. But that's kind of how institutions seem to be playing it. But that's going to wrap it up for this video. Thank you for making it to the end of this one. Subscribe to the channel, turn on post notifications so that you don't miss out on any future videos. Leave a comment, give the video a thumbs up, all the good stuff. Go check out Udemy courses in the link in the description or pinned comment down below. Check out M1 Finance, all that good stuff. And I will see you at the next video.